Well, good afternoon. Let's have a look at the markets picture. Asian markets higher this morning, and in the background, we had Chinese policymakers reducing one of the key lending rates in China, the key lending long-term rates, in the hopes that it will support the housing market, given the property slump that the country is battling with, adding the COVID situation in Shanghai. Nonetheless, as we look at the individual bourses and their performances, we're seeing the Japanese markets up 1.25%. Hang Seng Index in Hong Kong up 0.2%, rather 2.9% higher. And at the same time, we're seeing a climb when it comes to the Chinese market. As we look at what's happening from a European perspective, markets on that front also a little bit higher. And this is as from a market's point of view, both Asia, Europe, or the US, and even when we bring in South Africa as we try and wrap up another volatile trading week. But to talk to us about the latest when it comes to the market news, we are joined by Warwick Lucas, who is from Galileo Securities. Warwick, thank you so much for your time. We're seeing higher Asian markets, and we're seeing what the Chinese policymakers are trying to do in order to support the economy. And I'm wondering whether that sentiment is what is driving, our markets a little bit higher, and perhaps also what's unfolding when we look at the green across the European markets.
Natasha, it's certainly very, very helpful indeed. I think the China situation, and in particular in relation to COVID shutdowns, was a considerable concern. And what we're seeing there with a bit of a loosening up, it's also coming through in commodity prices. You can see in the last 2 weeks there was a big pickup after quite steep falls before in commodities. That's coming through now, and I think very supportive of our overall market, particularly, of course, our resources shares. You can also see that coming through in the rand price. The last week has generally been a bit rough for equities as a whole, but I think today things getting a little bit more stable, and hopefully a smoother week next week.
Let's look back at that week. I mean, any key themes that stood out for you? And we can also include, I suppose, some company earnings that caught your attention, whether it was good or bad.
So what obviously stood out for South Africans was the MPC meeting. I think they'll be obviously looking at the decision by the Reserve Bank to hike rates by 50 basis points, a little bit glumly. But I think they need to bear that in context. You know, the whole inflation cycle in South Africa has been quite a big one since the lows of COVID. I mean, it's now more than 3% up on those lows, whereas the kind of rate hikes we've seen, only 1.25% so far. So, frankly, the SARB is really playing it as gentle as they can. I don't think they could not have hiked. I think there were also potential credibility issues there if they didn't hike. So I think that was very much forced on them. I think in terms of results that and company news that are of interest, I mean, the Sibanye strike is bothersome. I think it's obviously a sector that's of incredible importance to the country and to our balance of payments, and it's obviously distressing to see how dogged the strike appears to be. I think as far as good results go, and generally positive commentary, it's nice to see Investec having some nice results out there, and they're talking about returning some capital to shareholders. I guess they're running a very tight ship there, relatively conservative on loans, which is perhaps a little bit of a concern there, but all in all, a company in good shape.
So earlier this morning, we had Steinhoff releasing a statement saying that they've received about 43,000 claims, which, according to my maths, probably sits at around 54 billion rand. It's been a long journey for this one, given where we were December 2017, where that share price fell down 90%.
Yeah, it's a kind of a curious announcement, because in digging through it, it doesn't very specifically say what they mean by 3.2 billion euros in value. Excuse me. If it meant well, that's how much people are claiming. That would be a bit wide of the mark, because the amount that people are claiming is basically a net available amount of about 750 million euros, or 13.5 billion rand. So there's some confusion, I think, as to what do they mean by that. If they meant that that is the cost price of what people bought their shares at, then I guess it means that perhaps less claims have come in than one would have expected, and perhaps that was due to the complexity of the claims process. I suspect quite a few potential claimants dropped out.
So you have US earnings season, but what's your sense of what is happening when you look at US retail earnings? Because we're starting to see the margin pressure coming through as a result of elevated inflation. Is this a theme you're expecting going into next earnings season as well?
Yeah, I think I think it is an issue that certainly can potentially have some traction. We've got the situation where so in March we saw sales up 1.4% effectively, 0.9% in April. I mean, these are actually quite strong numbers, and we're obviously seeing consumer confidence is firm, and it highlights that the Fed's view on hiking is really correct. And I mean, after all, when you have a mix of inflation and consumer confidence, it really does lead to strong retail sales. So you've got a potential inflationary circle going there, and the Fed really does need to rein it in, and I think they are following some appropriate treatment there.
Right, thank you so much for your time, Warwick Lucas from Galileo Securities. And going into next week, we are going to be keeping an eye on earnings coming out of Alibaba as well as Zoom on that is the Q1 earnings on Monday. But that is it from me. We'll be back on Monday. So we'll take a quick break and we'll be back.